Good afternoon, everyone. Today is Friday, April 22nd, 2016. My name is Christian. We're looking at the NASDAQ today. Maybe something else. We'll see. And start off with the NASDAQ, looking at 6-month charts, our short-term version here. We'll look at the long-term in a moment. Each one of these candlesticks represents 1 day of trading activity. So when we're looking at this chart, the main thing that draws my attention to it is a previous point here. You can't really see it under all that mess, but there was a triple top here. Okay, we basically had that going on for a while. And you can kind of look at this like this, or just look at it as one, right? So anyways, we had this triple top here, and I circled it, talking about that back in the time period. We had a big pullback, and we reversed, started moving to the upside. And we took this trade to the upside when you had this cross of these EMAs here, or simple moving averages, and your short-term moving average here on the 10 period and 20 period. So in this particular case, the same thing I've said about all the other ones. As long as you are bullish, you can stay that way until you get a close below this 20 period moving average. Once that's there, that would be the end of that move. The shorter term strategy would be anytime you got a close below the shorter term 10 period moving average. Here it didn't happen. You bounced off of it, bounced off of it, bounced off of it. Notice there's no close below it. Again here, and then we start getting close below. This starts to show the decrease of the acceleration to the upside, lack of momentum. Now we tried to bounce up here again. We got 1 day to the upside and then just stalled. 1, 2, 3, 4, 5, 6. This is called kicking. Your up day, down day, up day, down day. That's all you're doing, is moving sideways and then dropping back down. Still didn't close below the 20 period moving average, but we've pulled back to it. What I'm seeing here is just a topping situation. We've come up to test this previous high and we're failing at it. That's what I'm seeing right now. Also, you'll note if you look at the MACD here, you can see the high point here and then a lower high here. So you're just trending down right here. Same time period up here, you're trending higher in price. I was showing you this a couple weeks ago, telling you this is a bearish divergence, telling you that price is overextending and it's not having the momentum behind it, carrying it further. And this right here is the same thing on the NASDAQ as you're seeing on the other charts, and so I'm saying the same thing I said on the other charts. This is no longer a safe place to be if you're bullish. Now, let's look at a longer term picture here. Okay, here we are looking at the long-term picture of the NASDAQ. This is a 21-year chart. Each period of time is going to be weekly, though. And again, long-term chart. And you got a couple different things here. I'm looking at the line chart here, and then you got this dotted line here. It's 50 period moving average, and then this gray shaded area is your 200 period moving average. Fall into that, and you have gone into the bear market territory, right? We've seen this before. Okay. Now the thing I want to draw your attention to here is when you're in a bull market, we talked about this before, your price activity will stay above this 50 period moving average right here. Anytime you pull back to it, it's a great entry opportunity. You'll bounce off of it. Okay, that's what a bull market does. All right, that's very nice. When you turn into a bear market, you'll see something else happen. You will fall below that 50 period moving average. Okay, and then when you come back up to test that level, you'll fail there and you'll start to go lower. And this will give you a series of lower highs, right? And lower lows. Okay, so this is what a bear market starts to look like, and then you fall into that gray shaded area, and then you're actually in bear market territory until it reverses course. Right now, we've seen price activity stayed up here above that 50 period moving average, right up here. All right, stayed in that bullish condition for a while, and we continued this little process until we didn't. At that point, you fell below the 50 period moving average, and you start to come up, test it again. What do you find? If you're in a bearish market, you're going to find resistance at that 50 period moving average. Where are we at right now? Right where you expect to find resistance to 50 period moving average, which I just showed you on the short term as well. This is not bullish. Also, when you consider the fact that you have lower series of highs, high point here, lower high here, still lower high here, low point here, lower low here, this is not a bullish looking scenario. On top of that, longer term, look at the high point here. Okay, we move this across like that. Where are we failing at? We're failing right at the previous high. So this is all a bunch of stuff here that doesn't look like a strong place for bulls to be entering, and I wouldn't be. So right now, I think the safest thing to do is just to step out of the market and watch. That's my opinion, of course, but that's what I would do. When I look at the fundamental picture, I see that earnings have been really poor, and that's not going to be a catalyst to drive us much higher. And then when I look at the Fed coming up in the future, maybe this summer, talking about raising rates, that's not going to be a catalyst to the upside as well. So all these things are starting to make me really, really cautious about being bullish the market. Let me clean that up. God bless, take care, enjoy your weekend, and I will see you in the next one.